you'll see some references because references are a good thing. He has this: Ripple and Stellar providing instant payment remittance services in Malaysia. Checkmark. What is he referring to? Well, let's go ahead and cite the citation first. It comes from Journal of Education and Social Sciences, Volume 17, Issue 1. And this dates back to 2021, but hear me out. It specifically, talks about Ripple and Stellar. All right, so bottom part is the emphasis. Here you have it. Earlier then, in that particular year, 2021, Malaysian remittance company known as Mobile Money and Bangladesh's remittance company bKash with a K has decided to use RippleNet to process transactions between two countries. bKash, largest remittance company in Bangladesh, has processed 18.2 billion, at least back then. Malaysia is one of 3 countries where remittances has transferred from, at least at the time. Bottom part says, this is a good example of how blockchain technology can significantly improve the remittance problems faced by Malaysian small, medium enterprises. That's what SMEs stand for if you're new. Whether it is payments to suppliers or to employees. SMEs only need to create cryptocurrency wallets to hold XRP or XLM or any other cryptocurrencies that can facilitate their transactions. But again, why highlight XRP and specifically also XLM? I think that's a major deal moving forward.
If managing your crypto feels like solving a puzzle, it's time to switch to Decent Wallet. It's just a few taps. You can manage, track, and secure your crypto with unmatched ease. And here's the best part. Grab your Decent Wallet at a discounted price by using the referral link below. Don't miss out on making your crypto experience smoother and more secure.
All right. Well, think about this, for example. There's so much to it when it comes to all of this, because when we get further into the weeds of things, it's some of this that you're about to see right here. Mr. Smoke mentioned specifically the big money. Remember how we talked about all the money? Well, the big money is that institutional money is in cross-border payments. That's why we have Ripple and Stellar. Now let's watch this. This is 1:51 seconds that might pound home why you're here and why you're invested in these particular cryptocurrencies. Well, for me, it's generational wealth. There's always going to be the person that says price don't move much. Well, you need to wrap your mind around the bigger picture. Here we go.
Okay, so look, Western Union isn't going to go out of business anytime soon. They're going to adopt different technologies. Okay, but this is where the big money is. It's not in remittances. It's in these business-to-business payments across border. And that's why we have these kinds of companies like Ripple and Stellar. This is all about, right, business-to-business, back-end, big volume transactions, which are currently, very expensive. So if we look at the payment system, they're not sitting at the, you're sending money back to your uncle, right? It is, right, at the bank level. So the banks are making transactions with other banks. Now, nothing's changed here. You're still doing something like correspondent banking, except now, because the data can move around more quickly than the money moves around, right? We can settle these things more quickly. So the difference between a Bitcoin and a Ripple, in a nutshell, again, not too much time to elaborate, is that what Bitcoin uses is an open, permissionless, distributed ledger system, right, where anybody can jump in and do a transaction. Right, that's kind of the beauty of it. I can go buy Bitcoin, you can go buy Bitcoin. We don't need to ask anybody's permission, and there's no middleman that can, accept or deny, approve or reject. It's distributed, the consensus around validating these transactions. What's different about systems like Ripple and most of the blockchain systems that will prevail is that they are permissioned, meaning that you have to be, a member, and membership has its privileges. And so you have these different nodes, and the nodes basically know one another, okay? And then if I want to give money to my uncle back in France, let's say, then I have to go to one of these banks that are a member of the Ripple network, and then my uncle will go to one of these banks that's a member of the Ripple network, and then those banks will do their transacting through this distributed ledger.
He did a good job of doing this comparing and contrasting, obviously. I love the example, especially the guy in the video. But at the end of the day, you can see where Ripple and even Stellar stand out compared to, of course, BTC. Some of your thoughts before we jump into a little bit more of that nitty gritty for everyone, Jesse.
Yeah, so you see, like, that's the thing with permission networks, right? Like, at the end of the day, the banks are running on permission networks, and like they're gonna know, like, there's no such thing as being like free. Nobody knows who's transacting with anybody else. It's all like hidden, and we're gonna get away from the bank. So that's never gonna happen. Because as soon as you touch one of the bank ledgers with anything, or you touch an exchange, so let's say you did some private transactions between a few people, and you want to sell your Bitcoin or XRP, whatever you want to sell, you have to go to an exchange. Like, as soon as you touch an exchange, like your wallet is flagged. Like, from there, the government can see every transaction you're going to do after. So this idea that we're going to get away from the banks and they're not going to be able to see in transaction is ludicrous. It's not like that. Unfortunately, it's not like that, because on the blockchain, like, you have a digital, like, every transaction from that, as soon as one is hit, every transaction after, you can see the whole history of every single transaction that goes from that wallet forever and ever and ever and ever. So blockchain technology is actually the opposite of the whole Bitcoin maxi narrative. It's the absolute opposite. Like, the idea that, oh, we're going to get away from the governments, they're not going to see your transaction, is actually the opposite. Now they see every single transaction you'll ever do. So, but yeah, it's Ripple network, and because like when central banks are settling cross border, when they're going from one country to another, they say cross border, but it's the FX, right? It's going from one type of asset to another. And I truly believe the reason they always say cross border, and Brad Garlinghouse too, every time he's being interviewed on the news, he talks about, like, oh, we're gonna tackle this cross border payments, this trap liquidity cross border. It's not about cross border. When they say cross border, it makes it sound a lot smaller than what it is, because what they're really tackling is the FX. It's going from one type of asset to another, and including derivatives, right? Which is like now it's like 3.4 quadrillion per year, maybe even more, I think. So no, sorry, it's 1.6. Sorry, I lost my train of thought there. I'm not sure what the number is exactly now, but it's about FX. It's going from one currency to another. And when they say cross-border, it kind of sounds like I said the other day. It sounds like it's about, taking some money in a suitcase and crossing the border. It's not about taking money over the border. No, it's going from one type of asset to the other. And so the more that you tokenize everything, the more you need liquidity between those pairs, because that creates, because you could call that cross-border too. If somebody tokenizes stock, real estate in Hong Kong, and then somebody else tokenizes real estate in the US, and then somebody's got tokenized Google stock, and somebody else got tokenized Yahoo stock, and then somebody's got tokenized arts. Well, if the guy wants to sell some art, but he wants to get some Google stocks for his art, you have to have liquidity so that you could technically say that's a cross-border. You're going from one type of asset to another. It's not the same as going from US to yen or US to maybe the pound dollar, but it's still it's just to give you an example of when I say, like, when they say cross-border, it's more than cross-border. It's cross-currency. It's going from one currency to another, or one type of asset to another. So same, like, you need a bridge asset. The more you tokenize, the more you need liquidity, because these pairs, these tokenized assets are not paired. Like, there's no liquidity between these pairs. So what RippleNet, what the XRP ledger permits, is to go from any type of asset to any other type of asset. That's why the document that came from the Hyperledger Foundation, when talked about the internal value, it said that the XRP ledger becomes that global liquidity marketplace. That's crazy. If you break that down, you think about what it's saying. It's a global liquidity marketplace. It's a marketplace for liquidity. It's insane. And then the Ripple protocol, this one I haven't, it's been a long time since I read that. So unfortunately, I don't remember how to explain it now, but it multi-hops. Like, if somebody wants, let's say somebody's got US dollar and they want to buy some Google stocks, but there's no liquidity. Like the guy that has the Google stocks doesn't want to get US dollar. Well, the guy that has the US dollar the protocol will find, it will do pat finding or whatever, and it will find somebody that wants some US dollar, and it'll swap that, and then it'll swap for the Google stock. Like it does a multi-hop and just gets the asset it needs, and it's something like that. But this is I think this has to do with the what is it called? S pools, not S pools. Sorry, there's certain product that David Schwartz didn't want to talk about years ago. He said it's the secret sauce. It's the secret. He doesn't want to talk about it yet. Can't remember the name of that product was, but I think it had to do with multi-hops, or it could have been the automated market makers as well, which is extremely powerful beyond comprehension. But yeah, I know it's all the money, all the money.
Yes, indeed. We have one last thing to get into, and we're going to pull it up, of course, from Smoke. It's another particular video. You guys are going to enjoy this as well. From the same gentleman you saw in the previous video, but expanding a little bit more on this. So as we pull this up, you're going to see this brief clip. Let me describe it to you real quick. So for one, Smoke gets into it again. He states, if you really want to make money with blockchain, then you should be looking at the derivatives market. Listen closely. This is, again, very important to share some of these things, at least in my opinion. So let's go ahead and play this under 1 minute. We'll jump back for some other key findings from Smoke and get our closing thoughts here in a bit from Jesse. Here we go.
This. If you're interested in blockchain and you want to make money, forget about sending money back to your uncle in France. This is where you should be thinking. This is the size of the entire economy of the world right here. GDP. This is the notional principle of all derivatives. Okay? These are all forwards, futures, and options. And these are all derivatives except interest rate swaps. This right here, interest rate swaps. Biggest universe that most of you have never heard of. Millions of lawyers, millions of traders, millions of accounts. All that can be put on the blockchain. Okay? And all this clearing system and settlement system, which we took, Dodd-Frank is like this thick. This much of it has to do with clearing and settling of swaps. Okay, it's a nightmare. It's a mess. And we can take this whole system and simplify it with distributed ledgers.
So that's obviously a big deal. The other part that Smoke wants to highlight here is, again, some of the other key findings. And as you're about to see it here, take a look at this. Let's go down to the part right below that video. So yeah, he did share this roughly a couple months ago. But again, it's expanding upon it. Crypto derivatives does equal price action. I'll say it again, equals price action. For some of you guys, that's all you care about. No offense, but I can't blame you, right? So this is documented, like he says. Crypto derivatives, price action. That's a big deal, right? And of course, did we ever have a handshake in regard to XRP and Coinbase derivatives? Well, again, honorable shout out to Stellar XLM, because even with XLM, we have examples of stellar silver-backed XLM derivatives. But this one, of course, is with XRP. So again, just want to point that out, especially when it comes to Coinbase. As I take you to this and why it matters, documented at least from April 21st, again, not too super long ago. And technically April 3rd, right? He just posted it on April 21st. You see here this, and let's zoom in. So for one, it's the whole thing of the Commodity Futures Trading Commission, right? The CFTC. It's this whole thing of 40.2A certification. Yes, certification. Listing of XRP futures contract. Dear Mr. Kirkpatrick, pursuant to Commodity Futures Trading Commission, CFTC, or Commission regulations, etc., we hereby submit for self-certification in its initial listing of the XRP futures contract to be offered for trading on the exchange on or after April 21st, 2025. That's major. And like it mentions here, XRP futures contract will be monthly cash settled and margin contract with the following specifications. And of course, you see all the documentation there, so on and so forth. Now, I will state this real quick, and I'll just leave it at that because I don't want to make it like a super long type of commercial and whatnot. The thing you see above Jesse's head, obviously, is for BTCC. And of course, the difference between when you look at a futures, perpetual futures contract, if you guys don't know about some of this stuff, is basically speaking like perpetual, it gives you so much more of that freedom compared to just a regular futures contract. Of course, Coinbase, you have to get right on the date, right? And if you don't hit it right just on that date, well, they're like, aha, got you. And it kind of sucks, to be honest. This is why I use platforms like BTCC. They've been around since 2011. They're one of the world's oldest exchanges. They never had any major issues, and you do up to 500x leverage. Does that mean I want you guys to go lose your butt on some of this stuff? Absolutely not. If anything, understand this. Try out demo trading. Use not real money, virtual money, play around with it and so on. Then follow key traders that have a high success ratio and so on. That way you're at less risk, to say the least. And then start out small, maybe $25, $50, $100 and so on after you built that confidence and so on. I would never tell you to take, of course, your long-term nest egg and play around with it. For me personally, it's me using a separate portfolio, if you will, for obviously like things like trading. Because believe it or not, when it comes to leverage trading, this is how you can acquire a lot of things like your Ripple XRPs, your Stellars, and so on by leveraging some of this. And then again, reaching that big accumulation that you're looking for. But again, none of this is financial advice. You want to follow more people that do very well when it comes to leverage trading. There's plenty of people, of course, to do the charts, but find the people for you that consistently do it well. All the money by Q is taking, of course, a hiatus, but there's other, of course, key people that have done very well on BTC copy trading. Keep in mind with BTCC copy trading, there are key people that, for example, you can follow. I think up to 500 people. Up to 500 people can be followed, and they take about 10%. But it is basically automation. It's kind of like set and forget for the most part. Again, dependent on who you're following and whatnot. So just thought I'd throw that out there. Last but not least, again, Jesse, the way I look at it is it's clear as day that whether it's the Commodities and Future Trading Commission, whether it's the whole thing with derivatives, or it's the whole thing of specifically futures contracts, XRP is hitting every nail on the head moving forward. That means utility in motion, whereas institutions, et cetera, et cetera. Your closing thoughts.
Yeah, it's all the money. It's all the money. Yeah, if you looked at the chart there, that diagram, it showed like both bottoms were, the two lines were for derivatives. One was for one type of derivative, and the other one, both combined, were like 1.6 quadrillion. So it's $1,600 trillion, the derivatives market alone. Like that's where the big money is, and we know from documentation before, like this is the original plan. Like that's the big money, right? That's the plan for XRP as well. Like it's that one right there, because that's the biggest piece of the pie. So yeah, derivatives, all the money, all capital A, capital L, all the money. Yeah, no, it's all good, man. Nothing more to say there. Just all the money. And in the comments, you can say all the money.
Absolutely. There you go. And we'll know that you listened to the entire outline. On behalf of myself and Jesse over at Apex Crypto Consulting NFA, of course, on YouTube. Know what you have, know why you hold it. The research trumps FUD 110%. By all means, give a follow to our brother in the space. Shout out to him. We do follow each other. And that is Smoke Dog, who could be followed on X at SMQKEDQG. Okay, so just it's Smoke Dog and just replace the O's with Q's, and that's the guy you want to follow. Mm-hmm. Thanks again for tuning in, everybody. We'll see you on the next one.
See you guys.